Yes, you can go to prison for non-compliance with tax obligations. My name is Agbada S. Agbada. I'm a senior associate with the law firm of Aluko Oyebode in the firm's dispute resolution and tax practice. And my specialization is in taxation and commercial litigation. My understanding of a creator of a digital product is any person who creates original content. It could be in the form of digital goods or services for commercial purposes. The new tax laws are the Nigeria Tax Act, the Nigeria Tax Administration Act, the Nigeria Revenue Service Establishment Act, and the Joint Revenue Board Establishment Act. These new tax acts were signed into law on the 26th of June 2025 by the President of the Federal Republic of Nigeria. They will become effective from 1st January 2026. Now, the Nigeria Tax Act, the NTA, it provides a unified framework for the taxation of income, gains, profits, transactions, and instruments in Nigeria. What that means is that every tax type, every taxable person, every taxable instrument, everything has now been brought under one legislation. So you don't need to look at different enactments to understand the tax treatment of different transactions, different instruments. The Nigeria Tax Administration Act provides a unified framework for tax administration in Nigeria. It provides for filing obligations, other compliance obligations, when tax is required to be remitted, and consequences of non-compliance. The Nigeria Revenue Service Establishment Act, on its part, establishes the Nigeria Revenue Service, which would be replacing the Federal Inland Revenue Service. But apart from the change of name, the FIRS, as we know it today, will continue to function pretty much in the same way, but now under the name of the Nigeria Revenue Service. Then the final act is the Joint Revenue Board Establishment Act. This law establishes the Joint Revenue Board, Tax Appeal Tribunal, and the Tax Ombuds. The aim is to harmonize and coordinate tax dispute resolution and the formulation of tax policy. The taxes that will apply to creators of digital products will be companies' income tax for creators who are doing business under a limited liability company, personal income tax for creators that are doing business as individuals. Another tax that would apply to creators of digital products would be value-added tax. Value-added tax is tax on the supply of taxable goods and services, and irrespective of the platform or the means through which products or services are supplied, VAT would apply, except the products are exempt from VAT. However, the nature of products that are created and supplied by digital creators are not exempt from value-added tax. So for that reason, creators will be required to register for VAT with the FIRS, which will be NRS, from next year, charge VAT, collect VAT, and remit VAT to the FIRS or NRS as the case may be. However, these value-added tax obligations would also depend on whether the creator or the business of the creator qualifies as a small business or as a large business. If it qualifies as a small business, it would mean that apart from registering for value-added tax, there will not be any requirement to charge and to remit VAT on products and services. And the last one that would apply would be stamp duties. Now, stamp duties is a levy or charge on instruments. And again, irrespective of whether the instrument is electronic or physical, stamp duties would apply. Because stamp duties apply both to electronic instruments and to physical instruments, it is possible that certain instruments like electronic receipts, right, for transactions may be subject to stamp duties. So in Nigeria, tax applies on the global income of individuals and companies. And what that means is that if a person has earned income from different sources, all the sources would be aggregated in calculating the taxable income of the company or the individual. But it's also important to know that in calculating taxable profit or income, businesses and individuals are allowed to deduct all expenses that are wholly and exclusively incurred for the purposes of generating the taxable profit. So if we're to take digital creators, for instance, say you create courses online and sell those courses online, and then you earn XYZ dollars or XYZ naira. In that process, it's possible that you would have subscribed to certain software applications to enable you to provide the courses. You may employ staff that you would have to pay salaries to. It's also possible that you may have a physical place or a physical location from which you provide these services as your office, and of course you pay rent. Now, in calculating your taxable income at the end of the year, all the expenses that you've incurred in salaries, in rent, in subscription, everything would be deducted, right? If they are directly related to the provision of the services or the product, before you then arrive at the taxable income on which tax would be calculated. Interesting question. But the starting point is to provide some clarification on the revenue threshold for small companies or small businesses. There appears to be some inconsistencies between the Nigeria Tax Act and the Nigeria Tax Administration Act. Under the Nigeria Tax Act, a small company is defined as a company that generates turnover of not more than 50 million naira, except for companies that provide professional services. But the Nigeria Tax Administration Act defines small businesses as businesses that generate turnover of not more than 100 million. So threshold of 50 million in NTA, threshold of 100 million in the NTAA, right? But for the purposes of this session, let's say the threshold is 50 million, right? So if you operate as a company and your turnover is not more than 50 million, what it means is that you'll be exempt from income tax. And of course, if you're not providing professional services, right, you'll be exempt from income tax. Meanwhile, if you had provided those services as an individual, you would have been subject to tax on the entire income that you derive as personal income tax. So for creators that fall within this revenue threshold, the company registration option appears to be a more tax efficient option. However, it's also important to note that once you scale and you now exceed the revenue threshold, the profits that your company generates will be subject to tax at the rate of 30%. Now, this is a higher tax rate than what applies to an individual. In addition, if you draw salaries from the company, it means that your salaries would be subject to income tax. So even though the income of the company is not being taxed, the income the salaries that you draw would be subject to tax. Now, with respect to tax efficiency and the choice for companies for businesses or creators to choose between continuing as individuals or converting to limited liability companies, it's actually a commercial decision that creators would have to make. Do you intend or do you foresee yourself scaling beyond the revenue threshold anytime soon? If you have those prospects, maybe of course by the time you exceed, you will then be subject. So it may not necessarily the benefits will not be there if once you exceed, right? So, but for creators who are within the revenue threshold, of course, operating as a company presents an obvious advantage. For creators of digital products, the exemption of small companies that I just talked about, it's one obvious incentive. So for creators who are doing business under the name of a limited liability company who fall within the threshold, of course, will be exempt from income tax if they qualify as a small company. In addition, profits of companies from export of goods and services are exempt from companies' income tax if those profits are repatriated to Nigeria through government-approved channels. Of course, government-approved channels are commercial banks, the CBN. Those profits are exempt from companies' income tax. So for creators who are operating under a corporate name, who supply digital products or services to consumers outside Nigeria, the profits that they derive from those exports would be exempt from companies' income tax. Now, one point to note is that the law specifically mentions companies. So it is not clear if individuals who derive income from exports would also benefit from this exemption. Okay, so let's actually start with the registration obligation. First, every taxable person in Nigeria is required to register with the relevant tax authority and obtain what we call a tax identification number, right? This tax identification number is important or is required for you to continue to operate your bank account as a business or as a company, and of course it's useful for other purposes. But in addition to the registration requirement, companies are required to file their company's income tax returns within 6 months from the end of the accounting period. So let's say the accounting period of a creator who is operating with a corporate structure starts from 1st January and then ends on the 31st day of December of 2025. It means that the creator, the company in this case, will be required to file the company's income tax returns not later than the 30th day of June of 2026. For individuals, they are required to file their returns not later than the 31st day of March of each year. Again, it's on a preceding year basis, so the income that is generated from 1st January, let's say 2025, to 31st December 2025, the tax returns for that income will be required to be filed not later than the 31st day of March 2026, and of course the applicable tax remitted to the relevant tax authority. In addition to the income tax returns, creators would also be required to file VAT returns, and VAT returns are meant to be filed not later than the 21st day of the month succeeding the month that the supply happens. What this means is that if you made taxable supplies in October 2025, you are required to file your value-added tax returns not later than the 21st day of November 2025, and of course remit the applicable VAT on those supplies. And this is a very important question. It's an interesting question. It deals with the practicalities of enforcement. But the first point to note is that creators who are operating as individuals would not be subject to the jurisdiction of the FIRS or the NRS, as the case may be, because the powers of the FIRS are limited to the taxation of companies, right? So for individuals, it is the State Internal Revenue Services that would have powers to, collect taxes from them. And it is the state of residence of the individual. So let's take, for example, if you reside in Lagos and you are earning income online from digital products, your tax obligations are actually to the Lagos State Internal Revenue Service. Now, to the practical side of the question, I agree that there are millions of people earning income online from digital products, and to be sincere, I do not think that the tax authorities have the infrastructure or the manpower to track and enforce tax obligations across board. And from experience, what I've come to observe is that tax authorities try to be efficient with their tax administration, so they prioritize the big taxpayers, so that they don't spend 5 million trying to chase 2 million, right? So it's very possible that even under this new regime, they will continue to prioritize the big guys. But there is always a benefit in voluntary compliance, because at the end of the day, you may need your tax clearance certificate for several things. In Lagos, for instance, if you want to buy landed property, for you to be able to register it with the government, you need tax clearance certificate. If you are applying for FX from any bank, there is actually an obligation that you provide tax clearance certificates. And of course, there are penalties, very severe penalties for government agencies and even companies who engage in certain business transactions with individuals or other businesses without tax clearance, that do not have tax clearance certificates. So, and if you are going to apply for a tax clearance certificate at the point you need it, right, it means that you'll be at the mercy of the tax authority. They can assess you to back tax liabilities and then apply penalty and interest on those liabilities. So of course, even though the enforcement powers, they may not have the infrastructure or the resources to reach everyone, of course it will be important that businesses, creators, right, make efforts to voluntarily comply. Depending on the nature of the non-compliance, it could be administrative penalty, it could be compound interest, it could be imprisonment, right? Yes, you can go to prison for non-compliance with tax obligations. So the laws prescribe administrative penalties for different forms of non-compliance. For instance, if a taxable person fails to file returns or to pay tax within the prescribed period, there is an administrative penalty of 10% that would apply on the principal tax liability, plus interest, compound interest at the CBN monetary policy rate. And of course, it will continue to compound until you eventually settle your tax liability. But there are certain infractions that would attract prosecution and possible imprisonment if you are convicted. So yes, penalties, interest, and possible imprisonment. The smart move, in my opinion, is to voluntarily comply, and once you've registered and you've started complying, just consistently comply with your obligations as and when due. But I also need to mention that there is a risk that upon declaration or voluntary compliance, there is this risk that a relevant tax authority may want to enforce back tax liabilities. And where that happens, taxpayers or creators can engage in negotiations with the relevant tax authorities to resolve those disputes. There is, generally speaking, tax authorities have the powers to waive penalties and interest. So I believe that in situations of voluntary compliance, it is actually in the interest of the government for tax authorities to exercise these powers to encourage more people to comply and not penalize people who come forward to voluntarily comply. So my final thoughts would be that creators should try to voluntarily comply with their tax obligations. If you haven't been complying, it's a good time for you to start complying with your tax obligations. But it is also important that in that process, you need the guidance of the experts. So consult your tax lawyers, consult your tax consultant or accountants to assist you with the process of compliance, so that, you are not on the wrong side of the law. And again, like I'd mentioned, compliance comes with benefits, a lot of benefits, while non-compliance sometimes could result in a lot of pain. So it is always better, more beneficial in the long run to comply with tax obligations rather than dodge or evade tax liabilities. Once again, my name is Abada S. Abada, and I encourage you to pay your taxes.